If you operate as an NDIS service provider in Australia, the cash flow challenge is built into the funding model. You deliver services to participants, you claim through the NDIS portal, and then you wait. Payment processing timelines, plan management delays, and the administrative complexity of the scheme mean that the gap between when you incur costs, staff wages, vehicle costs, consumables, and when you receive payment can put significant pressure on your working capital. That gap is manageable with the right finance in place. Here is what is available to NDIS service providers, how it works, and what you can realistically borrow. NDIS service providers have a revenue profile that lenders are increasingly familiar with as the scheme has matured. Your income is effectively government backed through participant plans, and while the payment timing creates cash flow challenges, the underlying credit quality of NDIS funding is strong. Lenders who understand the NDIS payment model assess applications with this in mind. Invoice finance is particularly well suited to NDIS service providers because your revenue is tied directly to claims submitted to and approved by the NDIS. You can advance up to 85% of outstanding claim value to bridge the gap between service delivery and NDIS payment processing. This is often the most efficient solution for the specific cash flow challenge NDIS providers face. Unsecured business loans provide fast access to working capital for covering wage costs during high growth periods, investing in vehicles, equipment, or systems, hiring additional support workers, or expanding into new geographic areas or service types. You can borrow between $10,000 and $500,000 based on your revenue and bank statements, with approval in 24 to 48 hours. A business line of credit works well for NDIS providers managing the week-to-week cash flow demands of a service delivery operation. You draw funds when costs hit, wages are typically weekly. Repay when NDIS payments process and only pay interest on the outstanding balance. Equipment finance suits NDIS providers purchasing vehicles, assistive technology, specialized equipment, or fit out for a supported accommodation facility. The asset is the security, and rates are more competitive than unsecured loans. How much you can borrow depends on your monthly revenue, the volume and consistency of your NDIS claims, and your trading history. NDIS providers with established participant bases and clean financials access competitive terms. Lenders familiar with the NDIS payment model will assess your application more accurately than generalist lenders. Applications take under 20 minutes online. A commercial finance broker familiar with care and disability services businesses can identify the right lenders. Brokers are paid by the lender on settlement. Use the free business loan finder, reliable business tools to find which loan type suits your NDIS service business. 6 questions, a clear recommendation, no credit check, and no obligation.